Why do billionaires pay a lower tax rate than the average school teacher? Why does the IRS get pennies from people with private jets and 10 homes? Simple answer. They do not cheat, they use the law. Today, we are going to decode the top legal strategies used by America's wealthiest individuals to reduce or sometimes entirely eliminate their tax burden. And we will break it down step by step. This isn't fluff, this is law, psychology, and strategy working together. Welcome to Lovedsoulsanjay, where we empower creators, entrepreneurs, and professionals with insider level legal, financial, and psychological insights. If you want to understand money the way the 1% does, make sure to hit the subscribe button. Let's get into it. The Billionaire Tax Gap. Let's start with something that might shock you. According to a groundbreaking report by ProPublica, the top 25 wealthiest Americans paid just 3.4% in effective federal income taxes. 3.4%. That's less than what many middle income Americans pay. And people like Jeff Bezos, Elon Musk, and George Soros, some of them paid zero federal income taxes in certain years. Zero, as in nothing. Not because they are hiding money under the table, because they understand the system and they use it. This brings us to the first harsh truth. The US tax system doesn't reward hard work, it rewards smart structuring. Middle class W2 earner goes up to 37% income tax, while ultra rich investor goes up to 0 to 20% capital gains or deferred taxes. This is the gap, not illegal, just incredibly strategic. And by the end of this video, you will see exactly how they are doing it. Income versus wealth, the psychological tax trap. Here is the mental shift that separates the ultra rich from the rest. They don't focus on income, they focus on wealth. And that one shift changes the tax game entirely. Let me explain in simple terms. Most people work jobs, earn a salary, and get taxed every 2 weeks. That's income. The government takes chunks before you even see it. But if you own an asset, a business, stock, real estate, that's wealth. And unless you sell it, you don't pay taxes on it. This is where most Americans are psychologically misaligned. We are trained to celebrate a promotion, a higher paycheck, a bonus, but the wealthy celebrate appreciation on assets. They know that an asset growing in value is a silent money machine and it doesn't get taxed until you choose to trigger that tax event. That's unrealized gains. The key mindset here is this. The rich don't chase income, they chase control over when and how to be taxed. That's a superpower when building wealth. Tax what you take, not what you grow. Let's move forward with another one. Borrow against assets, the BuyBorrowDie Strategy. Now let's talk about one of the most powerful strategies in the billionaire playbook. Buy, borrow, die. Here is how it works. Step 1. Buy appreciating assets like of stocks, real estate, businesses. Step 2. Instead of selling them and paying capital gain tax, borrow against their value. Step 3. Use that borrowed money to fund your lifestyle, tax-free. Step 4. When you die, you has inherit the assets with a setup in basis, wiping out the tax burden. Let's unpack that further. When a billionaire needs cash, they do not sell assets that would create a taxable event. They walk into a bank and say, here's $100 million in stock, lend me $10 million. The bank agrees because the collateral is strong, the interest is low, and the asset keeps growing. The beauty, loans are an income and you are not taxed on debt. So now they are funding lavish lifestyle, yachts, jets, stuff without ever triggering taxes. Even better, the loan interest may be tax deductible under business or investment classifications. Then, when they pass away, their heirs receive the assets at the current market value. No capital gains out on all that worth. It's genius and completely legal. Buy, borrow, die. Step up basis results into $0 in capital gains taxes. Let's move forward with another one. Real estate appreciation and 1031 exchanges. Real estate isn't just about location, it's about legal tax magic. First, the appreciation. Imagine buying a property that appreciates in value year after year. You would accept to pay more taxes, right? Not with depreciation. The IRS allows you to write off the wear and tear of that property, even if it's actually rising in value. That reduction can be in the tens or hundreds of thousands each year, which means you could show a loss on paper while actually making money in real life. Then comes the 1031 exchange. It allows you to sell a property and reinvest the full amount into another property, deferring taxes completely. You are kicking the tax can down the road. And guess what? You can do this repeatedly for decades until one day you pass away and your heirs get the property with the step-up basis. Once again, no capital gains taxes. This is how generational wealth is built with real estate. You don't need to be a millionaire to use this. You just need to understand how real estate depreciation at 1031 exchanges stacks legally in your favor. While moving forward with next one, the family office structure. Ever wonder how billionaires manage their money so effectively? It's not just because they are smart, it's because they have an entire ecosystem working for them. It's called a family office. Picture this. You have got a tax attorney monitoring new legalization, a CPA fine-tuning directions, a portfolio manager balancing risk and return, an estate planner optimizing trusts, a philanthropic advisor helping you donate tax efficiently. That's not luxury, that's infrastructure. And it's all built for one purpose, to grow wealth and reduce taxes legally across generations. Even if you don't have 500 million, you can start building your own micro family office. Start by treating your finances like a business. Track everything. Create legal entities. Think in terms of structure, not just income. Let's move forward with another one. Charitable foundations. The legacy shield. Charity can do more than help others. It can help you tax bill. Here is how the ultra-rich use foundations to optimize taxes and reputation. Let's say you donate $10 million in appreciated stock. You get a deduction for the full value and avoid the capital gains tax you would owe if you sold it. Now that $10 million is sitting in a foundation you control, you can fund scholarship, grants, community initiatives while building your brand and legacy. And best part, the money is earmarked for charitable use, but to decide how and when it's spent within IRS rules, its impact and influence rolled into one. Let's go with another one. The corporate armor. The ultra wealthy use companies like armor because Corporations are legal persons and they come with tax perks. Instead of receiving income as individuals, they wrote income through entities like of S corps for lower self-employment tax, C corps to retain profits at lower tax rates, LLCs for flexibility and layer deductions, and through these they deduct vehicles, home offices, travel, meals, health care, and even paying their children legally. It's all legal with the right documentation. And the key, businesses are taxed on profit, not revenue. So every legitimate expense reduces taxable income. If you are not doing this, you are leaving money on the table. Let's go with next one. Trusts, tax strategies behind the grave. Trusts are often misunderstood, but they are insanely powerful. A trust is a legal arrangement that separates ownership from control. That means you can pass assets, reduce taxes, and shield wealth without technically owning the assets. Want to avoid probate? Use a revocable living trust. Want to reduce estate taxes? Consider an irrevocable trust. Want to transfer wealth without resetting tax liabilities? Use a dynasty trust. Trusts also help you in terms of, you can say, they help you in terms of, like, you can say, avoid estate taxes, set condition for inheritance, control wealth beyond your lifetime, minimize public court battles after death. This isn't just smart, it's next level legacy design. Going with another one, the Lobbing Advantage. This one's controversial but true. The wealthy don't just play by the rules, they help write the rules. From 2009 to 2023, over $2.5 billion was spent by billionaires and corporations on lobbying. Why? To insert tax provisions, carve outs, exemptions, and temporary rules that save billions in the long run. This isn't corruption, it's influence, and it's legal. The takeaway, if you cannot lobby Congress, at least learn to understand the tax incentives that already exist for business owners, investors, and philanthropists. Going with the final, what you can apply today. Let's bring it back to you. You don't need millions to start optimizing like the ultra rich. You just need to shift your approach. Create an LLC for your side hustle. Start investing in appreciating assets. Research real estate tax benefits. Learn the basics of trust structures. Work with a tax strategist, not just a tax preparer. Tax strategy isn't cheating, it's playing by the rules with precision. The rich don't fear taxes, they design around them. And if this video opened your eyes, good, because knowledge like this changes the way you see money forever. Before we close, let's lock in the big insights you have just gained. These are the key takeaways that the ultra wealthy already know, and now so do you. Insight 1. The ultra rich don't earn income, they grow assets. Insight 2. Borrowing against wealth isn't income. Insight 3. The tax code rewards behavior, not effort. Insight 4. Legal structures are power. Insight 5. Family offices and foundations extend influence across generations. Final insight. This game isn't just for the 1%. It's for anyone who learns the playbook. You have just seen how the wealthiest Americans legally pay less in taxes, and now you understand the system behind it. This isn't about envy, it's about strategy. And now that you know the rules, it's time to play them. If you got value from this, let me know in the comments what strategy surprised you the most. And if you want more red hot breakdowns like this, hit that subscribe button because this is how you stop hustling for every dollar and start mastering the system.